gentlemen, good day and welcome to Q2 and H1FY26 earnings conference call of Rupa and Company Limited, hosted by MUFG in time. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Bhagpe from MUFG in time. Thank you, and over to you, sir.
Yes, thank you. Good afternoon, everyone. I welcome you all to the earnings conference call to discuss Q2 and H1FY26 results of Rupa and Company Limited. On behalf of Rupa and Company Limited, I am delighted to welcome you all to this call. Thank you for taking the time out on this call to discuss our latest financial results and performance. To discuss our results, we have with us from the management, Mr. Vikas Agarwal, the Whole-Time Director, and Mr. Sumit Khowala, the Chief Financial Officer. They will take you through our results and then we'll proceed to Q&A session. Before we proceed to the call, a small disclaimer. This conference may contain certain forward-looking statements about the company which are based on the beliefs, opinions, and expectations of the company as on date of this call. The actual results may differ materially. These statements are not the guarantee of future performance and involve risk and uncertainties that are difficult to predict. A detailed safe harbor statement is also given on the page 2 of company's investor presentation. Now I would like to hand the call over to Mr. Vikas Agarwal. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. On behalf of Rupa and Company Limited, I extend a very warm welcome to all the participants joining us today for our Q2 and H1 Financial Year 26 results on conference call. We appreciate your continued engagement, and I trust you have reviewed the financial results and investor presentation available on the stock exchanges. In the second quarter, we recorded a broad-based recovery with positive momentum across key categories, underpinned by our focused execution and strategic agility. We adapted calibrated pricing approach, improved channel programs, and focused marketing initiatives to drive volume growth, enhance competitiveness, and reinforce our market position. Revenues for Q2 Financial Year 26 grew by 8% year-on-year, supported by robust 14% volume growth, driven primarily by strong traction in economy and mid-premium segments. While the mid-premium segment trailed economy segment in the growth pace, the focus ahead is to reignite momentum in the mid-premium segment to restore contribution balance and improve margin profile. Exports continued to deliver strong performance with year-on-year growth of 28%, contributing 4% to the revenues in the first half of Financial Year 26. Modern trade, including e-commerce, continued the steady momentum, contributing 8% to the H1 revenues. Thermal wear contributed 13% of the quarterly revenues. While the measures undertaken have strengthened primarily offtake, we remain disciplined in working capital management. The company generated operating cash flow of 23 crores during the half year. As of 30th September 2025, gross cash and cash equivalent, including investment, stood at INR 258 crores, while the net cash after accounting borrowings stood at 18 crores. Looking ahead, while competitive intensity in the innerwear industry continues to remain high, we believe our calibrated pricing approach, improved channel programs, and focused marketing initiatives will reinforce our position across core categories. The focus remains on driving volume-led growth in near term, and restoring margin balance through mix optimization and operational efficiencies. With this, I would now like to hand over to our CFO, Mr. Sumit Khowala, to take through the financial highlights of the quarter and half year. Over to you, Sumit.
Thank you, sir, and good afternoon to everyone. Thank you for joining us on the Quarter 2 and H1 FY26 earnings call. I will now take you through the key financial highlights for the period. For Quarter 2 FY26, revenue from operations stood at 320 crores, registering a growth of 8% year-on-year. EBITDA for the quarter stood at 22 crores as compared to 29 crores same period last year, registering a degrowth of 21% on YOY basis. EBITDA margin for the quarter stood at 7%, down by 260 basis points year-on-year. Net profit after tax was 15 crore as against 18 crore in Q2 FY25, which grew by 21% year-on-year. PAT margin for the quarter stood at 4.5%, down by 170 basis points year-on-year. Now moving to the half-yearly performance, revenue from operations stood at 500 crore, registering a marginal degrowth of approximately 0.7%. EBITDA for the period stood at 35 crore as compared to 47 crore same period last year, registering the degrowth of 26% year-on-year basis. EBITDA margin for the period stood at 6.9%, down by 230 basis points year-on-year. Net profit for the period is 20 crore as against 29 crore in H1 FY25, which degrew by approximately 31% on year-on-year. PAT margin for the quarter stood at 4%, down by 170 basis points year-on-year. The overall performance of H1 reflects company's steady progress in recovering lost ground from Q1 and regaining growth momentum. We continue to remain a strong balance sheet position. As on 30th September 2025, net cash surplus stood at 18 crores, reflecting our robust cash position. We remain committed to maintain financial prudence and cost control while continuing to invest behind the brand and growth opportunities. Our focus remains on improving profitability through a better product mix, efficient channel management, and disciplined working capital practice. With this, I conclude my remarks and open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ruti Bora from SAS Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, so my question is, sir, that why there is a sharp decline in the EBITDA margin despite the increase in the revenue for the quarter?
Yeah, the main reason for declining the EBITDA margin is the declining gross margin as the company adopted the aggressive pricing approach in order to be competitive in the market. So there is a dip of 140 basis points. Ad spend for the quarter has been risen by 60 basis points, and other administrative and other expenses has been raised by 60 basis points. So overall, this combines 2.6% EBITDA down.
Okay, sir. And my next question is, can you throw some light on the thermal performance that we have, and what is your order book for the same?
Thermal this quarter shows a robust growth. It shows a volume growth of approximately 20-24% with a contribution of 13% in the revenue. So we have a good order book as of now, and we expect that the same will be continue in Q3, and it may be even better in Q3.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Viral Jain from SMG Finance. Please go ahead.
Yeah, hello. Am I audible?
Yes.
Yeah, so thank you for the opportunity. So few quick questions from my side. Can you just give us a walk regarding the future plans on the capex?
There are no major capex. There will be routine capex of 12 to 15 crores for FY25-26.
Got it, sir. And my next question was, can you give us some light on the marketing spending this time?
For H1, the ad spend is around 7.5%, and we expect that it would be remain same by the year.
Okay, sir. And on quarterly basis?
Quarterly basis, it's 5.1%, and overall, the guidance is 7.5% for the year.
Understood, sir. And my last question was regarding the working capital days for the quarter and the yearly guidance.
The working capital for the H1 is 235 days, And since the market is quite competitive, we expect that this year the working capital will be slightly reduced, maybe by 25 days at the end of the year.
Got it, sir. And sir, what will be the yearly guidance?
It's around 210 to 215 days.
Got it, sir. That's all from my side. All the best for the future.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Richa Shah from SRP Associates. Please go ahead.
Hello, sir. As it can be seen that the growth during the quarter was led by the economy segment. So, could you tell us what initiatives led this growth in your segment?
Pardon, ma'am?
It's largely because of price competition, ma'am. So we were holding our prices and all, but seeing intense competition, we are also going a little bit with the price war, compromising the margin for a short while, but focusing more on the volumes at the moment.
Okay, sir. And also, keeping in mind the earlier guidance which we have gave for Q2 EBITDA margin was 8 to 9%. But this quarter, we only delivered 7% margin. So, could you put light on that? What quantitative bridge to reach in FY26 exit margin back towards FY25 levels?
At the moment, the competition is so intense. So, as I repeated, we want to focus on the top line at the moment. So, margin we might come, and because of some flexibility on the margin side, we have to compromise on that. But we want to ensure the top line growth at the moment.
Okay, sir. Okay. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Prashant, an individual investor. Please go ahead.
Hello. Is my voice audible?
Yes.
Yeah. So my first question is, you have already alluded that to maintain top line and revenue, you have provided schemes and, you have provided more benefit. So, in the near future, is there any plan to reclaim the, net realizable price, or this will continue? Those schemes and rebates and channel discounting will continue for the rest of the year also?
Yeah, of course, we don't want to do that, but in quarter one, we were sticking to our original policy. But as I said, for a short term, we have to match, the market competition is so intense. So probably for a quarter or two, we might follow that strategy. But once we have the top line in place, we have another marketing initiative in place. So once that also runs in parallel, I am sure we'll have better margins.
Okay, but so in a way it indirectly also says that there is no product differentiation and basically the channel does not see any differentiation between this company's products and competitors, and price is the only differentiator. So, in that case, whatever spend we are doing on marketing, advertising, that is not providing any leg up or any support in maintaining the price. Would that be a correct assumption?
Well, of course it helps. But the competition in terms of parallel brands, it's so intense because of whatever reasons. For short term, yes, but long term, definitely these activities help. And of course, there's a product differentiator and all. But at the same time, you want to be aggressive and you want to gain your market share also.
Okay, so uncomfortable question. Yes, please tell me.
Right time, it's easy to absorb the operational cost and every other expansion plans you have in place, the marketing initiatives you have in place.
So finally, if it comes down to maintaining top line at the cost of, by discounting the prices, is there any, can we see that in the near future, at least the advertising expenses will be reduced so that, at least some sort of EBITDA and profitability is maintained?
That is what we, as a management, we need to strike a right balance. So quarter one, we have a different strategy. Quarter two, we have a different strategy, which we have a 14% and a volume growth. So as I said, once we have a volume growth, of course, there will be another different initiative where we want to have higher margins for sure. As a management also, we don't want to, but the competitive activity is so intense at the moment, we have to take up this strategy.
And any plans of expanding into new geographies to compensate for the to increase the volume?
Yeah, that is a continuous process, and as I've shared our numbers, whether it is in terms of export or modern trade or other areas, we are expanding our reach, our presence in all those segments and channels as well.
So any definite numbers, like in quarter 3 and quarter 4, how many retail touch points or how many distributors the company is planning to add?
There is no definite number, but we are sticking to our original guideline of 10% revenue growth by the year end is what we are sticking to.
Okay. And in terms of capacity utilization for our own units, what was the capacity utilization for quarter 2 and H1?
Around 75%.
Okay. The constant, quarter 1, 2 average, H1 it was 75%.
Yeah, 75%. And once we are focusing on sports and other thing, it will gradually increase, and of course we'll parallelly keep increasing the capacity also.
One last question from my side. In terms of channel inventory, how do you feel that the channel is placed? Are they overstocked? Are they have the right amount of inventory? What is the risk of sales return or product returns?
At the moment, stocking is quite less. It's much below normal levels rather. So we are quite optimistic on that front and quite comfortable on that front.
Any reason for this?
The market is getting competitive, so traders and the wholesalers want to build up the pressure and all. But as the consumer demand revives back and all, and it will help us to have higher primary and all.
And just, on this, you mentioned that advertising and promotion is around 7.5%. So without advertising, the sales promotion discounting, what would be that as a percentage of sales?
The promotions and all?
Yeah, the promotion discounting, rebates.
Around 9%.
Oh.
Including cash discount. CD.
Including?
Cash discount including CD is roughly 9%.
Okay, so this will include cash discount, turnover discount, rebates and other schemes and everything.
Yeah.
Okay. That's all from my side. Wish you all the best for the coming quarters.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question is from the line of Preeti Agarwal from SK Associates. Please go ahead.
Yeah, thank you so much for the opportunity. I would like to know that with 14% volume growth and 8% revenue growth, how much of Q1's primary offtake gap is fully recovered? And what is the implied H1 volume growth versus last year?
H1 volume growth is around 3%. And means whatever shortfall we have in Q1 we have achieved in quarter 2, and all the channel inventories are not that much high, so there are primary offtakes, and we believe that coming quarters the sale will be on a higher side.
Understood. And also you had mentioned the focus is towards reigniting the mid-premium and premium segment. So could you tell us what changes are being implemented or what are the strategies you are developing to achieve this?
So we are increasing our marketing reach and having the sales and marketing team. We are robusting the marketing team higher in a more constructive way. And probably in the process of having a sales head also in place, and we'll increase the marketing activity for those.
Okay. Understood, sir. That's it from my side. Thank you so much.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Dheeraj Shah from RJ Investments. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So thank you for the opportunity. I just have a couple of questions. So firstly, During the first quarter, athleisure contributed approximately 15% to your revenues. So, what was athleisure's Q2 share and margin profile, if you could shed some light on that? And just for follow-up, where do you see athleisure by FY26, if you could shed some light on that?
Yeah, athleisure contributes around 8% this quarter, and the value and value growth for the quarter is around 13%.
And for the annual one, we are targeting at least 14 to 15% growth in this year.
Understood, sir. Understood. And so secondly, in Q1, as you can see, you held pricing discipline while the competitors pushed prices, price cuts and schemes and discount perhaps. So in Q2, you pursued aggressive pricing policy, and where do you stand now on headline pricing versus competitive cuts? If you could shed some light on that, that would be helpful.
Didn't get you. Please repeat the question.
So it was like in Q2, you pursued aggressive pricing policy. Is it right to assume that? And just want to follow up, where do you stand now on headline pricing versus competitive cuts? If you could say something about that.
For maybe a quarter or two, we still feel competition activity will be intense, so we have to match up with that. But at the same time, Q3 will have billing of more of primary of thermals and these winter wear and all, where margins are better, and the demand is also good this year. So overall, it should help us to have better revenues and better margins.
Okay, understood, sir. Understood. All right. Thank you. That's all from my side, and all the best for the future quarter.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Aradhana Upamanyu from SMS Investment. Please go ahead.
Hello.
Yes.
Am I audible?
Yes, please.
Thank you for the opportunity, sir. Sir, actually, I wanted to ask that modern trade and e-commerce contributed 7% of revenue in H1 FY26. How do you see this channel scaling over the next 12 to 18 months?
Modern trade is one of the most focused area, and in fact, it is the key driver for the growth of the revenue. So some of the recent initiatives we have taken is that we have appointed a e-com head as well as EBO head also. And secondly, we are on go live on Amazon.com through an aggregator. Thirdly, recently we have launched a kiosk for our infant brand Peekaboo, and we are also strengthening our presence in the large retail chain format stores such as Style Bazaar, City Style. So these are our growth initiatives for increasing revenue through modern.
We are looking for at least 20% growth in this area.
Okay, sir, got it. And sir, thermal wear contributed 13% of revenues this quarter. Do you expect this contribution to sustain or expand in the upcoming winter season?
Probably we should expand in coming quarter, in this current quarter.
Okay, sir, got it. Thank you, sir. All the best.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, we have reached the end of the question and answer session. I would now like to hand the conference over to Mr. Omkar Bagwe from MUFG in time for the closing remarks.
Yeah, thank you for joining us on the call today. I would like to thank the management for sparing the time and answering all the queries. We are MUFG in time, Investor Relation Advisors for Rupa and Company Limited. For any queries, please feel free to contact us. Thank you, everyone, and have a great day.
Thank you so much. Thank you.
Thank you. On the behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.